FX Coins, this is Christopher Lewis taking a look at the NASDAQ 100 and the S&P 500 in America. The NASDAQ 100 has fallen a bit during early pre-market trading on Tuesday, as it looks like it is going to be a bumpy ride this week. We are testing the bottom of a bit of a channel that started back in roughly the third week of May. And at this point in time, that's not a huge surprise that perhaps we are going to struggle a little bit. This is mainly due to the fact that markets cannot go in one direction forever, obviously. But I would also point out that the bottom of this channel also features the 50-day EMA. So it'll be interesting to see how that plays out. If we do, in fact, break down below the 50-day EMA, a little bit of a pullback toward the 22,700 level is possible, followed by the 22,250 level. Keep in mind, this is non-farm payroll week, and that will have a major influence on risk appetite. But at the same time, it's also worth noting the volume will start to pick up from Wall Street. I would say definitely the later we get into the week, the more institutional traders will be involved. And most certainly after the jobs number on Friday, you would anticipate that maybe the beginning of next week really starts to see a bit of a pickup, as traders are going to start focusing more on not whether or not the Federal Reserve will cut rates, but what they will say about rate cuts going forward. There's also the argument to be made as to what that means. The S&P 500 has fallen pretty significantly in pre-market trading again, as it looks like the 6,500 level is going to be a bit of a barrier. The 6,350 level is your next support level, followed by the 50-day EMA and 6,200. While we are most certainly in an uptrend, we are a little overdone, and it has gotten a little long in the tooth, as it were, so a pullback makes perfect sense. Going back to the Federal Reserve and rate cuts, it's worth noting that quite often there is a bit of bullishness heading into the rate cut in anticipation for easy money coming back into play. However, a lot of times stock market starts to question why the Federal Reserve is cutting rates. Is there something bad out there that we don't see? So a lot of times it will actually kick off the exact opposite reaction that you're expecting. A lot of times sellers will come back. So we could be witnessing the beginning of correction in both the NASDAQ 100 and the S&P 500. In this environment, it's very important to be cautious with your position sizing, as the next week or two could be quite volatile. Quite frankly, though, a 5 to 10% correction in both of these indices would actually be healthy.